Hello, everyone. It's 9:44 a.m. West African time. That's about 8:44 a.m. UTC. It's a wonderful morning out here. Good morning to you. And depending on what time zone you're streaming from, I want to wish you a good afternoon and good evening. Well, it's been an amazing week of trading for us all in this community as we've made some significant profits across our key assets for this week. We are talking about the US All Spot, USDJPY, and of course the XAUUSD, thanks to a blend of dynamic forces. During the course of the week, we saw gold benefiting from safe haven flows amid trade tensions and inflation worries. And of course, the crude oil also rode the wave of supply disruption concerns and a softer US dollar. In fact, on the crude oil, I was able to hit TP target twice for this particular week. We are going to be looking at all of this together while we dive into the chart. And of course, the USDJPY started the week on a strong bearish note as we saw intervention speculations from Japan with robust domestic data giving the Japanese yen a lot of strength to gain traction. I will be diving into that one too. So if you're USDJPY, we are going to be reviewing the chart together to see what has happened and how we will be preparing for this week. In fact, on the USDJPY, I missed out on a 200 pips move yesterday, Wednesday stroke Thursday session. I will be explaining that to you in a moment. So as we head into today's final trading session of the week, we're also going to keep in mind that many market participants will be high in profit-taking activities ahead of the weekend. Now, this end of the week psychology might set the stage for a reversal with price action potentially pivoting from the momentum we've seen throughout the course of the week. So we are going to be taking this into consideration as we dive into the technical analysis and gear up for an exciting session. So stay tuned in. You do not want to be missing out on this session as I have simple technical setups that we are going to be using to help us navigate this market this week. And before we go into the business, I would like to welcome the newcomers in the house. You're highly welcome on board. My own name is Sheriff Daramola, and we run the Forex Morning Mastery 3 times in a week. That is Mondays, Wednesdays, and Fridays, where we all come together to have a deeper insight into the market, looking at things from both technical and fundamental perspective. So you're highly welcome on board, guys, and I do encourage you to actively engage in the comment section. And don't forget, always remember to give the video a thumbs up. Your likes are valuable to me, and of course it also serves as a way of inspiring me to do more of this. So with that being said, here we will be diving right into the business, and as always, the first thing we normally do, of course, is to keep tabs with the fundamental factors that will be influencing the sentiment in the market for today. And since we are monitoring the USDJPY, the gold commodity, we have been focusing on impactful events from both the United States and the Japanese economic docket. Now, for this week, we had like 3 major impactful events to look out for. On Sunday morning, as on Monday morning, we were able to see the gross domestic product Q4 from the Japanese economic docket, which detailed a significant expansion in the Japanese economy in the last quarter. And of course, we saw the actual data come in at 0.7%, way higher than the previous quarter's data. And of course, it was way higher than what market participants were looking forward to. So it was quite a very good start for the Japanese yen. And as a result of this, coupled with inflationary pressure and Bank of Japan intervention narrative, we saw the yen take advantage of the US dollar dropping to the downside. We are going to be looking at that in a moment. So USDJPY fans, stay tuned in as we get into that details. Then on Wednesday, February 19th, we had the FOMC minute meeting published. And of course, this gave us an insight into how the Fed officials are seeing the U.S. economy. And of course, it's the tone from the FOMC minute was more of a cautious approach, though they did acknowledge the fact that inflation is still there and it's going to be taking a while before inflation hits their 2% target, and as a result, there has been an indecisive situation as regards to that. So it's still subject to whatever data comes in from the United States. And then on Friday, today, February 21st, we are going to be looking at two high impactful events from the United States economic docket. And in fact, we are talking about the publication of the S&P Global, which details the manufacturing and service sector. And for those of you who do not know, the S&P Global publication gives the market participants, investors, and retail traders insight into the health and performance of the service and manufacturing sector of the United States economy. And this report obviously factors in data such as business activities, new orders, and employment levels. And it is an index, that's why it's called the Purchase Managers Index. So it's an index that runs between 0 to 100, where anything above 50 is considered to be an expansion in that sector, and anything below 50 is considered to be a contraction in that sector. Now, if we look at the S&P Global Manufacturing PMI, which is coming in 2:45 p.m. UTC, that's about 3:45 p.m. local time. The previous month data came in at 51.2, which is above the 50 mark, showing that there's been some positive light from the manufacturing sector after about 7 months of staying below the 50 mark. So it was quite a good news for the manufacturing sector in the United States for last month, and market participants, economists are projecting a little bit of increase from the previous month, pegging it at 51.5. So we're definitely going to be looking forward to see what the actual data will be today. Will it be just as market had expected, below expectations, or even beyond expectation? And of course, we know what that means to the market. If it comes in higher, there is a high chance that the US dollar will gain some traction ahead of the weekend. And of course, if it comes in lower, it may likely signal a negative response to the US dollar. Then simultaneously, we are going to be looking at the services PMI as well, which gives us an insight into the service sector. And of course, the last 7-8 months, I've seen the service sector continue to project resilience as it had give consistent figures, which has been higher than the 50 mark in the last 7 to 8 months. And I think this will continue as we have expectations pegged at 53, a little bit above the previous month data. So we look forward to see what the actual data will be on that particular one. So if things are a little bit rosy, that is if the data comes in higher on both features, we are likely going to see a good traction for the US dollar today. So these are the major events we are looking forward to today. And of course, we all know that the anticipation of this event definitely will make the participant in the market behave in a particular pattern, which as retail traders we want to look out for and use it as an edge to strategically position ourselves for the next move. So with that being said, here we shall be running into the business for today. So as always, also, I see you in the comment, Wokocha Kingdom. It's really been a while since I've seen you here. How are you doing, Wokocha? Trust you're doing very well. So, as always, the first asset we are going to be looking at this morning is going to be the USOILSPOT, which of course had done tremendously well. I was able to hit TP target yesterday evening at the $73 area, as you will see right in the account history right below your screen. I hope you can see it right there. I've just showed you on the platform there, so you can see it. I had two position triggered yesterday, and it finally hit TP target with a total of 19, let's say approximately 20 pips, giving me about $20 on the USOILSPOT for the last 3 days. For those of us who capitalize on this opportunity, well done and kudos to you. And besides, I just noticed that my XAUUSD trade is in profit of about 60 pips. For those of you who saw my update this morning and took advantage of this one, I would suggest you move all stop losses right now. Let's secure some profits, as anything could happen. So I will just move my stop loss to somewhere around the break-even area. Let's secure this position while we continue to monitor price action. So I moved my stop loss on the XAUUSD. Now let's go back into the USOILSPOT commodity. So looking at the chart here, it is quite obvious that the market has been very bullish since the beginning of the week. Remember, we had our first buy at the break of the $70.85 level, and this led us to look out for more buying ideas at the break of the key level at the $71.50 level, and of course the $71.85 area to maximize this profit. And we need to know why as price continue to rise during the course of the week. Well, to top the list is the supply disruption concern, as we saw Ukraine continue intensify their drone attacks on Russian oil pumping stations, and this of course is fading hopes for a peace deal in the region, and this has raised concerns over supply disruption. Then to also help the US crude oil through the week is the weakness in the US dollar. As we saw recently, the price of the US dollar dropped significantly to its lowest point. I think the last time price was here was in December, so we had a very critical support line for the US dollar at the moment. And considering the fact that the USOILSPOT is a US dollar denominated asset, we all know anything that happens to the US dollar will definitely rub off on the US crude oil. So since the value of the dollar dropped, so that means that the price of crude oil will become cheap for other currency assets to purchase. And as a result of this, demand will definitely increase. And when there is increase in demand, what happens? Price will rise. And this have one of the major reasons why we've seen price rise through the course of this week. Now, as we head into the final trading day, what are the chances that this momentum will continue? Remember, today is the final trading day of the week, and it is expected that participants will be rounding up their trading activity ahead of the weekend, which could result in profit-taking activities, as those who had bought at the $70.85 area may want to take some profit heading into the new week, into the weekend, because we don't know what will happen, especially the Russian-Ukraine situation and the Trump tariff situations as well. So they need to be very, very cautious, and we are not going to ignore the possibilities that price could drop from this particular area as a result of profit-taking activity. So we are going to be looking at a couple of things today, like the PMI report. We want to see what the data will be like. Is it going to be favoring the US dollar or not? If it favors the US dollar, definitely price will drop to the downside. And if it doesn't favor the US dollar, we may likely see an uptrend continuation from here. So we are going to use this to time our trades very effectively. We are going to be talking about that in a moment. Then we're also going to be monitoring the geopolitical situation. We want to stay alert on news regarding geopolitical tensions in Russia and Ukraine, as well as updates on US inventory data. This can provide timely cues for entry or exit points from this particular area. Now, in as much as the potential for the uptrend is still there, we cannot ignore the fact that sellers could also take advantage of this current situation. We have signs of slowing demand from key markets like the Eurozone and China, which warrant some caution at this point in time, and it could limit some further recovery from recent lows. Then we also have the fears that President Trump's trade tariffs might weaken the global economy as well, which could dent fuel demand and holding back aggressive buyers at this point. Now, for us to have a deeper understanding into how key players are digesting this information, we want to look at the charts and see the structural detail price action has evolved into in the last 3 to 4 days. Now, if you look at this 1 hour time frame here, you can see that we have a beautiful ascending trend line in play, which has been consistently respected since this week. And you know how we treat our ascending trend lines. As long as price remains above the structure, we want to maintain a bullish bias, and we will not be considering selling unless this ascending trend line is breached and broken to the downside. Now, the last 1 hour, I've seen this candle just close right now, a ascending trend line. And for me, I think we are at a crucial juncture in the market where depending on how the market reacts to this price level around the $71.85, $71.90 area will determine where we are going for today. So my point of view here is to see what happens here. How we're going to see sellers finding it difficult to break down the $71.85 level, which could evolve into a reversal pattern, let's say a double bottom structure that will incite an uptrend continuation. So for me to buy the US All Spot this morning, I would like to see some buy pressure evolve around this area. It could come in the form of a double bottom structure, a inverse head and shoulder pattern, or a falling wedge around this area. All I just want to see is signs that sellers are finding it difficult to break through this ascending trend line and the $71.85 level. Then I will be joining an uptrend move, then looking at adding more buy positions at the breakout of the $72.80 level. So that is the only condition that will make me consider buying the US All Spot today. Now, in as much as the uptrend scenario is looking visible, remember today is the last trading day of the week, and we talked about the signs of slowing demand from Eurozone and Russia and China, which warrant some caution. And this fact here, the sentiment here, could limit any further recovery to the upside. So if that is going to be the sentiment that would drive the market today, coupled with fears that the US administration's tariff plans might weaken the global economy, we could see signs of selling pressure evolve from this particular area. And for me to consider selling the US All Spot today, I would like to see price breakdown, retest the structure, giving me confirmations that buyers have lost the momentum before joining that decline. Then I will be thinking of adding more sell positions to the breakdown of the $71.50 level. So I will just place the sell stop order for the $71.50 level right here. So just in case I'm not around, so I just place that sell stop order. You can see it right below your screen. And I will wait for a breakdown retest around this area for me to join that decline. So that is how I will be selling the US All Spot today. So I encourage us all to mark out the structures on our chart, as we are going to be using it to navigate this market today. So there you have it on the US All Spot. Let's see how the market will play out. If there is anything new that I didn't mention here, I will definitely update us on both my trading view, on my Telegram platform. So if you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So in the absence of no questions, I'll take this as a confirmation that we are all on the same page. I hope you've marked out the structures accordingly, and let's see how the market will react to that $71.85 level going forward. So I wish us all the best of luck on the US All Spot as we head into today's trading session. So moving on to the next asset on our watch list. So the next asset we are looking at this morning is the USDJPY, and of course you can see what happened since our Forex Morning Mastery on Wednesday. The market had dropped significantly to the downside, and we've had over 200 pips in price movement as price tests the 149.300 area. And unfortunately for me, I was unable to capture the strong bearish momentum. Remember, I mentioned here on Wednesday that if price breaks down this ascending trend line, that we shall be looking out for confirmations in the form of retest of that structure to continue the downtrend move. And look at what happened it was as predicted. We saw price drop below the ascending trend line, came back to retest the 151.750, and boom, price dropped significantly to the downside. I missed out on it. I saw the breakdown of structure, but I was willing to wait and see how the market will react to this trend line and the 151.475. It was late in the night and I never wanted to risk anything around this area, especially when I'm going to bed. So it was during the Asian session of Wednesday stroke Thursday we saw this massive move to the downside, and when I came back yesterday morning to check the market, price had already moved significantly. So I missed out on that opportunity, and if any of you took advantage of it, well done. Kudos to you for being stateful with our analytical approach. And for those who missed out like me, it's all well and good. At least we're still on the positive side of our portfolio since the new week, this week began. So let's see if we can bank on any opportunity around this particular structure. Now, let's talk about the major driver for the Japanese yen at this point. We have a strong CPI data from the Japanese economy showing signs of rising inflationary pressure in the Japanese economy, and this of course has underpins expectations of further Bank of Japan rate hikes, which obviously has supported the Japanese yen over the US dollar. And of course, in the economy as well, there has been improving domestic fundamentals like signals of sustained wage gains and an improving economic backdrop in that economy as well. We have a rebound in the manufacturing and services PMI of the Japanese economic docket, which has further anchored the strength of the Japanese yen. Then at the beginning of the week, we saw a robust GDP data from the Japanese economy, all of which had anticipated, or let me say supported, this downtrend move here. So for me, it is looking very bearish at this particular point in time, since price has broken down the trend line, and in fact we want to be looking out for ways to continue the downtrend move. However, in as much as we're looking out for selling ideas, there is a chance for the dollar to gain some momentum too. Of course, we are looking forward to the global PMI reports, which is coming up later today. We talked about this earlier. And of course, there are some speeches by FOMC members too as well, which everyone will be looking forward to today for some major insights. And because of this, we need to be very careful around this particular market structure here. Now, first of all, let us talk about the major trend here and how we intend to capitalize on the continuation to the downside. So we have a strong impulsive move that started from the 152.325 all the way down into the 149.280, and I want to see this old bullish traction as a retracement of that bearish leg in an attempt to continue the downtrend move. Now, how far will this retracement phase go before the downtrend continuation will start? Well, we will need our Fibonacci retracement tool, and if we do that correctly, running it from the peak to the trough of that impulsive leg, we will be aiming at an area between the 50 and the 78.6% of that previous impulse leg to identify areas where we will be selling. So this is my sell window for today. So we have the 150.800. So let's mark that out appropriately. So we have the 150.800 and the 150.675. 151.675. So let's have it right there, and then let's delete this as we no longer need it. So we have a sell window right now between the 150.800 and the 151.675, and look at how beautifully that window lines up with this descending trend line we marked out on the 4 hours time frame, and of course that psychological level had the 151.00 area. So I will definitely be looking out for selling ideas around this confluence. So if price can get into that particular area and I see signs of selling pressure evolve there, I will be willing to join a sell. And what are the signs I will be looking out for? A double top structure. If I see one around this area, I will be jumping into a sell from that juncture. So what I will do right now is to place an alert around the structure so that when price gets into that area, I will get a command to sell. So that is what I do. So I will be notified as soon as price gets into that area and use that to monitor price action around that point. Now, in as much as the momentum is looking bearish, remember, we could still see price climb up even as far as the 152.00 area, which dovetails to over 150 pips. Now, why have I said so? Now, let's look at this trend line here, which was broken yesterday. So we had this trend line. So I would like to extend it further up. So from a theoretical standpoint, when price breaks down a key structure like this, we expect that price will come back, retest the structure, maybe to continue the downtrend move. And if we look at the distance between where price is right now and that 152 area, we are talking about a 150 pips move. And personally, I do not want to miss out on that one. So I will also open myself up to the idea of an uptrend situation here too as well. Now, if we zoom into the current structure, we can see that price appeared to have evolved into what may be looking like an uptrend continuation pattern, where the breakout retest of the resistance line coincides bullish ideas. So for me, I will be looking at buying. So in fact, I want to place a buy right now. So I will place a buy right now with the hopes of being part of that uptrend continuation. So I will place my stop loss somewhere around the 150.1. So I'm just doing that right away. If you look at the bottom of your screen, you will see I've placed a stop loss on that one. Now let's scale down into the 15 minutes time frame. I want to show you something that is going on here. It appears we have an uptrend continuation pattern. Let's mark out the structures here. So we have a resistance line at the 150.600 area. Okay. 150.600 level, 150.600 level. So that is there, and then we have a support line, I think somewhere around 150.150, I think 150.150, right? So we have 150.150 there. And if this old formation turns out to be an uptrend continuation pattern, well, a breakout of the 150.600 could welcome buying ideas for us, right? And if price continues to climb and gets into the sell window, we move all stop losses, secure the buy position while we see how the market reacts within the sell window. So if a double top structure evolves around here and we get our sell position triggered, we will be taking out of that buy position in a worst case scenario, break even. So let's keep this in mind as we capitalize on an uptrend scenario from here. So I would like to add another buy stop order above the 150.600 area to maximize the uptrend scenario here. Now I will place that right away. Okay, so have stop loss at this point. Of course. So here we have it. So we are looking to add more buy positions at the breakout of the 150.600 area. Now, if price does not break out of the 150.600 and instead it continues to drop to the downside in an attempt to continue the downtrend that started this week, I will be looking at adding more sell position at the breakdown of the 150.150. So I'm going to be placing a sell stop order below the 150.150. And then where would my stop loss be? 150.400 is looking promising. And put at 150.450. So sell stop order right there. So we want to keep all of the options open. If the bullish traction begins, we are in for it, and if the sell begins, we are in for it. So let's exercise patience and continue to monitor price action within this newly identified structure we have on the 15 minutes time frame. So there you have it, my in-depth look at the XAUUSD. So all the boils down to the structure we have here on the 15 minutes time frame, and depending on the direction of the breakout will determine where we are going for today. So I wish us all the best of luck on the USDJPY, and as always, I will take the next 5-10 seconds break to see if there are any questions whatsoever before we move on to the final asset on our watch list for today. Stay tuned in. All right, so in the absence of no questions, I want to assume that we are all on the same page. And with that said, let's move into the final asset on our watch list. Stay tuned in. Final asset on our watch list is the XAUUSD, my favorite, of course. And once again, we saw the price of gold commodity test another new record high, had it 2,955 during yesterday's trading session. And since then, price has dropped dropped, not significantly, but doing a little bit of choppy situation. And thanks to safe haven demand amidst trade war fears, inflation edge appeal, geopolitical tension, and a weaker US dollar environment, all of which supported the ascent of the gold commodity. And remember, during the course of the week, I did mention here that this ascending trend line is going to be playing a significant role in helping us determine the trend of this market. And what do I mean by that? As long as price remains above the trend line, we shall look out for buying ideas. And the point that this trend line is breached and broken, then we'll start considering selling ideas. So we've been profitable so far this week on the XAUUSD, and now it appears that the market is doing a reversal at this point in time. And for those of you who saw my update on both my Telegram and TradingView platform, you will be in a sell position right now. So this was what I was able to come up with, and I think that was on the 15 minutes time frame. As you will see, let's scale down into the 15 minutes time frame. So this was what I was looking at this morning, and immediately I got the structural detail. I shared it with you guys on my platform. So we have a descending trend line playing right now, where price had consistently found series of lower lows and lower highs right now, and with a final breakdown of the 2,929, I have a strong feeling that we could be seeing some profit taking activities going into the weekend, and this could incite more bearish move to the downside as long as price remains below that descending trend line. And why could this be the case? Are we going to be, why is it likely that sellers might take over the market today? Well, topping the list here is the overbought technical conditions. We are at an uncharted territory at the moment. Slightly overbought levels on the daily chart may cause some traders to hesitate and take some profit, and this is psychological, of course. I think I've mentioned this times without number in this community that whenever price action hits an all-time high, those who had been part of that profitable journey have a high tendency of taking profits to safeguard against any crash from that particular area. And this appears to be what is going on right now. As you can see, price has gone through a consolidation phase, appears to be going through a retracement move, all of which will be a reflection of profit taking activity. So for me, coupled with a potential US dollar rebound, a potential positive tone to the PMI today, we could see dumping of the gold commodity, take profits activities around here to incite a sell-off. So I'm open to continue a downtrend move here. Now, for those of us who actually missed out on the sell, you will see at the bottom of your screen, I sold around the 2,930, somewhere right around this area. That's where I sold. So for those of us who missed out on this one, let's see if the market will come back to retest the structure. It could be the retest of a 2,929 or the retest of the trend line. All we want to look out for is signs that buyers are finding it difficult to break out of the descending trend line, and this would reflect on the chart as continued selling pressure on our lower time frame. Then we can actually join the downtrend move at the breakdown of the 2,929. So the bearish expectation still remains open. But if price does not climb up, of course, it's not all the time that price climbs up to retest structure, and instead it continues to nosedive, then we are going to be looking at the 2,919, the breakdown retest of the 2,919 as an area to look out for more selling ideas. So if price does not go back to retest the 2,929, I want to be selling the breakdown retest of the $2,919.50 level. So that is how we will be selling the XAUUSD today. But if price action decides to break out and retest the 2,929, breaking out of that descending trend line, buy pressure above the structure will welcome buying ideas. So let's see how this is going to play out, and if price goes ahead to break out of the 2,940, we're looking to add more buy to our existing trade. So that is my simple view on the XAUUSD today. We have a simple trading setup. Let's see how the market will react to the structure, and trust me, if there is anything new to share with you, I will definitely give you an update on both my trading view and Telegram platform. So it's on this note, I think we are done for today's session. If you have any questions, feel free to let me know in the comment section. I will take the next 5-10 seconds off. Let's see if there are any questions before we move into the end of the session. All right. So in the absence of no questions, I think we are ready to take on today's trading session. We took on all the 3 financial instruments on our watch list for this week, which includes the USDJPY, the USOILSPOT, and the XAUUSD, all of which we did tremendously well during the course of the week. The USDJPY, we had a couple of losses during the first half of the week. Thank goodness we were able to recoup some of the losses and of course made some profit on top of it. So I think it's on this note, we've had I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening and a wonderful weekend. Bye bye.